Good morning and good afternoon, doctor and everyone. My name is Chung Ke-ying. Today, our group would like to talk about the challenge faced by the Genesis Global Trading. Genesis is the major player in the cryptocurrency, and how its collapse in 2023 served as a warning for the entire sector. Genesis grew quickly but fell just as fast due to its heavy reliance on the unstable crypto markets and a problem like the collapse of the three area capitals and FTX. This presentation, we will explain what happens, why it happens, and what we can learn from it. So let me go through the introduction part. In this part, I would like to talk about the Genesis Global Trading and how it went bankrupt. Genesis was a major player in the cryptocurrency lending, but in the yearly 2023, it filed for the bankruptcy with over 3.5 billion in debt. The main reason was its reliance on the risky loan to the big clients like Three Area Capitals and impact of the FTX collapse. Genesis trouble is began in the mid-2022 following the collapse of the Three Area Capitals, also known as 3AC. Genesis was a 3AC largest creditors with a 2.4 billion exposure. When the 3AC went into the liquidation, it set off the chain reactions. Then, in the November 2022, FTX is also known as a major cryptocurrency exchange, also collapsed. So this thing even worse for the entire crypto industry, it also including the Genesis. Genesis have to freeze their customer withdrawals, and the loan business shrank from 40.6 billion to just 2.8 billion. By the January 2023, Genesis could not recover it and filed for the bankruptcy. So the company therefore showed the dangers of relying too much on the large clients and not being ready for the market crash.
Now I will talk about Genesis Global Capital Crisis. The first one is Genesis early success and risk. Genesis started strong by lending crypto to wealthy investors and institutions during the crypto boom. However, the company was heavily dependent on volatile assets such as Bitcoin and Ethereum. This made it extremely vulnerable once the market began to tumble. And the second one is the crypto market crash in 2022. Cryptocurrency market declined in the year 2022. A huge downturn took place in the cryptocurrency market. The major cryptocurrencies such as Bitcoin significantly shed value that caused the market value of the asset backing Genesis loans to plummet. This led to two significant issues. The first one is lack of collateral. The decline in crypto price means that the assets themselves were no longer collateralizing the loan. The second is liquidity issues. As the collateral value dropped, Genesis became unable to meet the growing demands for withdrawals from clients. At the close of 2022, Genesis had liability nearing 3 billion but did not have the liquidity to satisfy those claims. Moreover, Genesis owed about 3.5 billion to over 100,000 creditors. This led to freezing the withdrawals and also a loss of investor trust. And the third one is leadership and strategy mistake. The resignation of CEO Michael Moreau in 2022 over effort to regain trust, but it did not solve the core problems. Genesis quickly scaled up into institutional lending and mismanaged the risk. It took on too much risk with speculative asset and high leverage lending. It worked when the market was high, but it backfired when the market crashed. For example, when the major borrower like Three Arrow Capital began to default, Genesis could not recover. And the last one is external pressure. SEC increased scrutiny on the crypto industry. This gave compliance issue for Genesis and made it even more challenging for the company to raise capital or restructure its liabilities. Furthermore, the collapse of market in 2022 had a cascading effect on the portfolio of Genesis. The key borrowers such as Three Arrow Capital had high leverage in the crypto market, which meant they could not fulfill their repayment obligations once asset value dropped. This chain reaction made it impossible for Genesis to recover its investment, hence deepening its financial problems. That's all for my part. Next, I will pass to Hoyan to continue the slide.
Good morning, everyone. My name is Hoyen. Today, I would like to talk about the financial risks that play a critical role in the collapse of Genesis Global Capital, a major player in the crypto lending markets, which declared bankruptcy in 2023. Firstly, Genesis faced several liquidity issues when it was unable to meet clients' withdrawal requests. This shortfall stems from the inability to liquidate assets quickly enough during a sharp downturn in the cryptocurrency markets. By the end of 2022, liabilities had ballooned to $3 billion. As the market declined, more clients sought to withdraw their funds, further depleting availability liquidity. This loss of trust from clients highlights the vital role liquidity plays in maintaining financial stability, especially in highly volatile industries like crypto lending. Secondly, credit risk also significantly contributed to Genesis' downfall. The company lent heavily to high-risk crypto firms and institutional clients like Three Arrows Capitals, which defaults on loans during the market downturns. Genesis lacked robust credit risk assessment mechanisms to evaluate the risky portfolios of its borrowers. This failure created a cascade of non-performing loans, deepening the financial holes in its balance sheets. Genesis was further impacted by systematic risks inherent in the interconnected and volatile crypto markets. When key assets like Bitcoin decline, they trigger a ripple effect, causing widespread defaults among lenders connected to Genesis. Furthermore, the introduction of stricter regulatory scrutiny by agencies like SEC added operational challenges, limiting Genesis' ability to attract new investments or restructure old debts, compounding its financial distress.
The first strategic recovery plan for Genesis Global Capital to address its financial challenge efficiently is restructuring. Genesis needs to renegotiate its debt with creditors to reduce financial pressure. This includes rescheduling payment or negotiating a haircut to reduce the total debt burden. By focusing on its most profitable sectors, Genesis can achieve greater efficiency. Discontinuing non-core assets will free up resources and allow the company to concentrate on its strengths. Next, we recommend divesting from riskier, smaller blockchain projects that are more vulnerable to market volatility. This will enable Genesis to channel its efforts into core competencies like over-the-counter trading and institutional crypto loans. By selling underperforming assets, Genesis can generate immediate cash flow and profit itself for future growth. Cost-cutting is essential for profitability. Genesis has already reduced its workforce by 20%, but further actions are needed. Genesis can significantly reduce operation costs and increase margin by optimizing procedures, outsourcing non-core functions, and lowering the cost of technical infrastructure. Lastly, Genesis needs to improve its risk management procedures. Exposure to speculative assets can be reduced by implementing stronger loan-to-value ratios and clearly defining risk tolerance. The business will stay solvent and
even during market downturns if the portfolio is regularly stress tested and liquidity management is improved. In summary, this strategy will help Genesis stabilize its financial position and prepare for long-term success. By having this strategy recurring plan, Genesis can navigate the volatile cryptocurrency market with confidence.
Now I'm going to talk about Genesis Global Capital Solutions. Genesis Global faced significant liquidity challenges due to extreme market disruption and the failure of FTX and Three Arrows Capitals. In response, the company implemented a series of measures to stabilize its operations and regain client trust. The first one is suspension of redemption and loan issuance. Genesis Global Capital temporarily held redemption and loan origination to manage liquidity pressures and prevent further stress. This move, while necessary, impact client confidence and creates negative sentiment. However, it provides the company with time to recognize its financial situation and plan recovery strategy without immediate pressure from withdrawals. The second one is engaging financial advisor and restructuring expert. Genesis hired Moelis and Co., a restructuring firm, to develop a recovery plan and avoid bankruptcy. While the expertise provides strategy direction, the process is costly, time consuming, and carries risk if the plan fails to resolve liquidity issues. Next is support from market participants. The key market players, such as B2C2, step in to purchase Genesis loan, providing critical liquidity during market turbulence. However, reliance on external participants comes with risk as their ability to assist depend on their own financial health and market conditions. The fourth one is capital infusion from parents company DCG. Digital Currency Group inject $140 million into Genesis to strengthen its liquidity position. Despite its infusion, the funding was insufficient to close the liquidity gap completely. Genesis remained heavily dependent on DCG for further financial support, which poses risks if the parent company face challenges. The last one is transparency and client communication. Genesis maintain open communication with clients, providing updates on the recovery progress and timelines for reopening withdrawals. Transparency helps build trust, manage client expectation, and reduce panic, fostering a sense of partnership and loyalty. Conclusion: through strategy measures such as suspending redemption, seeking professional advice, securing external support, and maintaining transparent communication, Genesis Global has taken critical steps to address its liquidity crisis. However, the success of these efforts to depends on effective execution, sustained external support, and market conditions. The company's ability to stabilize and recover will ultimately determine its future viability.
Alright, it now comes to the final section of our presentation. That is the conclusion. In conclusion, the collapse of Genesis Global Capital highlights the critical risks and challenges within the cryptocurrency industry. The company downfall was primarily driven by liquidity shortage, over reliance on the speculative borrower like Three Arrows Capital, and lack of diversification of its portfolio. Weak internal governments, coupled with increased regulatory security, further compounds its financial troubles. These challenges provide valuable lessons for the broader industry. They emphasize the need for robust risk management practices, diversify the investment portfolio, and proactive the leadership to navigate the uncertainties of volatile markets. Looking ahead, Journey's path away to recovery will require strengthen its internal government by implementing stricter lending standards and regular stress testing of its portfolio. Additionally, non-core operation will help stabilize its finances. but refocus on sustainable and profitable activities such as over-the-counter trading. Genesis has the potential to rebuild its position and regain its trust in the market. Ultimately, the success of Genesis will depend on adopting discipline, transparency, and adopt strategies. This approach could serve as a blueprint for resilience not only for Genesis but also for other institutions operating in this evolving sector. Before we end, I would like to introduce some references that we used during this assignment. One and two. Okay, that's all for our presentation. Thank you for your attention.